This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. I want to talk about a subject today that is all the rage. It's everywhere. Everyone has an opinion. There's a reason why it's happened. At least everyone has an opinion or a reason today in December 2014. And that's crude oil, which has dropped like crazy, right? 50%. What a drop. Now, for those that don't know, you can make money when a market drops. And trend following traders have made an absolute fortune shorting crude oil. Now, in the middle of 2014, trend following traders had no fundamental understanding, no fundamental view that crude oil was going to collapse. No one else did either. But of all these stories for 2014, and crude oil has got to be one of the biggest market stories of 2014. It should be on the front cover of Time magazine. It should be the lead story on Bloomberg. It should be on CNBC 24/7. Trend followers, crude oil, home run, take it out. This is the big win. These are the guys that killed it. Boom, wham, thank you, ma'am. Well, of course, that's not exactly how it plays out. Trend following trading only gets press when people want to write about the death of trend following. Let me give an interesting example, though, of this is a piece that I'm actually lifting from Howard Marks of Oaktree, and I'm going to quote Howard in a second. But he quotes Byron Wien of Blackstone, formerly of Morgan Stanley. I mean, this is one of these guys, the names that we all have seen on CNBC for years. Byron Wien, they just trot him out there, and he is an expert, and we're all supposed to trust and bow down. And I don't know Byron. He's probably a fine guy, but I don't like his strategy because I don't know what his strategy is. Now, Byron had an event in the summer of 2014 at the Hamptons for well-heeled investors. And he had a conclusion at the end of the event. Quote, "Most believe that the price of oil would remain around present levels. Several $1 trillion have been invested in drilling over the last few years, and yet production is flat because Nigeria, Iraq, and Libya are producing less. The US and Europe are reducing consumption, but that is being more than offset by increasing demand from the developing world, particularly China. 5 years from now, the price of Brent is likely to be closer to $120 because of emerging market demand." Maybe he will be right. Maybe he will be wrong. Today, he's nowhere close to right. You know, what good is a prediction if it's not even close to reality? I mean, crude looks like it has the property of going towards $20 a barrel, not 120. There is no trend at the current moment saying it's going to go to 120. If it does, adjust yourself, adjust your orientation. But if one of the most respected Wall Street guys, Byron Wien, whose name is everywhere, his face has been everywhere for 20, 30, 40 years, and if he doesn't have a clue about the fundamentals, if he doesn't have a clue about what the price of crude will do, how the hell can you? Right? Isn't it that simple? It's that simple. And that's what's so cool about trend following. Because trend following traders don't have a clue. They don't know. They wait, and if the market starts to go in a direction, they follow along. They place their bets. They have stop losses. The trend following trader doesn't know that crude will give the great home run until the home run's over. People say, well, Mike, how far can a trend go? Who the hell knows? You got to wait. It's about patience. Now, I also want to quote a friend of mine, Barry Ritholtz, and Barry is extremely pragmatic. He's very blunt, and I caught the headline on one of his Bloomberg pieces, and he was talking about oil. And he says, think you're smart, markets are laughing. He goes on to say, as you read the many predictions for 2015, do you remember how many strategists were forecasting a collapse in crude oil prices at the start of the year? That's right, precisely 0. And Barry is dead on true. Who was talking about a collapse in oil? Look, I just got back from Dubai. I've never been to Dubai before, but it's flat out amazing. The amount of wealth generated by oil, and my gosh, I would have loved to just woken up one day and had oil be buried in my backyard. But to see what wealth has done, what oil wealth has done, is just flat out amazing. It's flat out amazing. Now, what happens to some of these areas of the world if oil doesn't go back up? I'm sure things change. I'm sure things adjust. Things won't be the same. Again, the world is in a constant state of flux. Markets are always up and down. What's the point of going through life fixed to one price, fixed to one belief? When you don't know, I don't care how smart you are, I don't care how rich you are, you do not know where any market is going to go tomorrow, the next day, the next week, the next month, the next year. You just don't know. And I don't care what the best traders and investors are saying. They're not betting. Oh, I think the market will go to here 1 year from now, so I'm going to bet $1 billion on that. That's bullshit. That's not what they're doing. I don't care what their public pronouncements are. They are not doing that. Everyone that makes money is a trend following trader. Maybe you use some type of fundamental discretion to make your bet, but the best and the brightest out there do not lose money. They cut their losses. That's what they do. That's the name of the game. I mentioned Howard Marks. Like Barry Ritholtz, he also writes from a very pragmatic, blunt standpoint. And he talks about the idea in his most recent newsletter about imagination and the lack of imagination. The lack of imagination that people cannot see the possibility that oil could drop 50%. Why not? Anything can happen. Stocks are at all-time highs. You can't imagine stocks at all-time highs today going down 75%. A 75% drop is not in your repertoire of catastrophic events. You can't see that happening. What's wrong with you? Of course that can happen. Am I predicting that? No, I'm not predicting that. I have no clue. It's not even the point. The point is it can happen. And if it does happen, how do you participate? How do you protect yourself? What's your system? What's your process? What do you do? If you have no plan, if you have no process, then you wake up like all the other fundamental guys 6 months from now saying, well, it was just amazing. We didn't see it coming. We don't know what happened. We're so confused. Well, let's get back and make a prediction for 2016. Bullshit, 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 bullshit. There's a lot of bullshit out there, isn't there? There really is. That's what I love doing my podcast, and I'm preparing a massive guest list for 2015. I should just rename it. Forget the trend following podcast, the no bullshit podcast. I guess that's what I would do if I didn't have to worry about marketing and whether somebody thought I was correct or right or wrong. I probably would call it something like that. That'd probably be my personality. Look, markets are not logical. Investors are not logical. These things aren't objective, unemotional. Give me a break. Again, as Howard Marks says, unemotional? You want no surprise? Well, you're going to be in for a surprise all the time. If you don't think there's such thing as surprises, then you're going to be surprised every damn day of your life. Surprise is it. That's how life unfolds. Yes, you can apply a machine. You can apply a system to the markets. But that doesn't mean perfection. That doesn't mean consistency. What it means is that you protect your downside and that you have enough chips to pony back up to the table and play again. It doesn't mean that everything will unfold exactly as you imagine. Of course not. That's impossible. But that's what the major media people say will happen all day long. Consistency, predictability. I want to quote Howard Marks. It's hard to say what the right price for a commodity like oil, and thus when the price is too high or too low. Was it too high at $100 plus, an unsustainable blip? History says no. It was there for 43 consecutive months through this past August. And if it wasn't too high then, isn't it laughably low today? Question mark. The answer is that you just can't say. Ditto for whether the response of the price of oil to the changes in fundamentals has been appropriate, excessive, or insufficient. And if you can't be confident about what the right price is, then you can't be definite about financial decisions regarding oil, end quote. Now, I don't have Howard sitting here, and I'd love to chat with him and ask him what he means by that last sentence. That last sentence that says you can't be definite about financial decisions regarding oil. I think he's true, and I think he's false a little bit. Of course, you can't be definite. But if you have a system, you don't have to be definite. Definite's not the point. You know, if a big trend in oil, for example, goes from 100 to 50, who cares if you only make money from 90 to 60? You're still getting the meat of the trend. Investing is not about definitive. It's not about the guaranteed. That's not the objective. And again, I'm taking a little bit of a thought from Howard, and I'm not trying to attribute a view to him. Obviously, very successful investor, trader, very wise guy. I love his writings. Even though he's not a trend following trader, as far as I know, I love the way he thinks. So I'm not trying to beat him up about the word definite. But definite is not what you want. You just want a system that tries to keep your head above water and make money in the long term. So when the headlines happen on the next big move, whether it's up or down, on the market that no one expects to do anything, you might be surprised. You might not have thought about the catastrophic potentiality of that particular new market moving up or down 50, 60, 70, 80%. You might not have thought about it. But in the great zero-sum game of the markets, I will guarantee you this, somebody else has. And they're sitting there on the other side of your position, making money with an approach grounded in the foundation that they don't know what's going to happen next. I'm still excited about this subject all these years later. 15 years later, after I got into this subject, I still love it. It is absolutely fascinating. It's fascinating that so many people talk about how prediction, and today, not always, but people talk about prediction doesn't work. You can't know. Very smart men like Barry Ritholtz, Howard Marks, they're guys that I agree with on their perspective. But what I love about trend following is it's the prescription. It's the RX that nobody ever gives once they announce that predictability is not possible. Once they note that uncertainty is the rule of the day. No one ever offers the prescription of trend following, of systematic trading. I still, after all these years, I don't get it. I mean, is it just the fix is in? Too many players in the long-only mutual fund space have no incentive to even utter the word trend following. It's against their book. Is it that simple? Is that the reason? Is that the reason why this subject is just not talked about? Now, of course, you will hear about assorted ETFs and mutual funds and big traders, and a lot of those things are talked about in my world. But relatively speaking, this is the minority. This is off the beaten path. This is under the radar. And that under the radar element is what keeps me motivated. And as I work on a big new project for 2015, something that I hope, and I don't mean to sound silly, but something that I hope will be epic, that will get the debate flowing even more, get the conversation moving even more. Because there's reasons that trend following is not a known commodity. But I'm going to do my level-headed best across all of my work, my podcast, to bring out insights and to inspire. And that really excites me. What a great story Crude oil in 2014. No one saw it coming. What an awesome story. And again, like I said, having just been in Dubai, it's amazing what crude oil has done for certain parts of the world, boy. I mean, that architecture in Dubai is absolutely amazing. The Burj Khalifa, this big old new building they built, the tallest building in the world for right now. You just stand outside that baby and you look up and your neck hurts. It's so damn high. I think it's about twice the height of the Empire State Building. Absolutely amazing. Oil. It goes up. It goes down, baby. You've just got to have a plan to make some money. Because if it's not buried in your backyard and you don't have the guaranteed pump, just pumping an ounce, everyone else buys it. If you don't have that way to make money with oil, well, there's another way. And as part of a diversified portfolio, as a trend following trader, you can participate in the next move up or down. That should be inspiring. I hope everyone has a great, I hope everyone has had a great 2014. I look forward to 2015 as well. It should be fun. I will be traveling the world as it has become normal for my existence. Come early January, I will be back on a plane headed to parts unknown to start the machine up again, to get the podcast out, to bring the most interesting guests on the planet to my show. It's what I love to do. I hope everyone enjoys. Thank you for listening. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.